This is volatility 50 index. The broker is there with volatility 50 index, and I take my structure on the 4 hours. I'm an intraday trader. I want to get in and get out of a trade if possible within a day or at most within 2 to 3 days. All right. I don't do swing trading that holds for weeks and all of that. So as an intraday trader, the time frame that I use for my key levels, for my zones, I use the 4 hour um, time frame for my key level and zones. That does not mean that I don't take key levels from the daily on the weekly. I do my top down analysis starting from the weekly down to my 4 hours and all of that. So if I'm to go to my weekly time frame on this pair now, this pair volatility what? Volatility 50 indexes. Volatility 50 index. We can see this key level here. This is the weekly time frame. We can see this key level here. This is a demand zone. You can see this demand zone here. When price rallied up, created equal high. This is equal high. This equal low is here. So are actually supposed to take either the equal high or the equal low. So we've been stuck in this range. Liquidity resting here, liquidity resting here. But because this is a weekly zone, you could see that this demand level, when price dug into it last week, this week price has been pushing back up. That means this demand zone is holding. Okay, this demand zone is holding. You can see the demand zone. That means this demand zone is holding, right? This zone is holding. Price did not clear the equal low liquidity on the lower time on the weekly time frame. So let's come to daily and see what we have. When you come to daily, you can see that on the daily time frame, there's no marketing efficiency here. Okay, there's a marketing efficiency right here that is also holding. All right, from here, this candle, this last candle here, all the way to this low, to that candle's low, is a daily demand zone. Although all these things are internal structure, because for a zone to be valid, a zone has to break structure. If you look at this zone, you see that this zone failed to take out this last high, which is why it created equal high liquidity. For a zone to be valid, it has to break structure. But even though it did not break structure, it is respecting this zone. Price is respecting this zone. Even though just giving us a reaction, it could give us a reaction that will take us to this next supply level on the daily time frame. Okay, I want you to understand why this price is actually buying now, right now that it is buying. You can see the supply level here. Price could, on the daily, price could tap into that supply, because if you look at this supply, you see that this supply, that supply zone, it broke structure. You could see the structure, it broke this structure here, somewhere around here. Okay, so that supply zone broke structure. This is a break of structure, even though it is internal, because price has been in an internal range doing this equal high, equal low. It has been ranging in this box. It has been ranging in this box, but it has been breaking structure internally to the downside. After it created this high, it took out this last low, took out this low, created a new low, created a new high, and now it has cleared this place. So what we have now is price doing a pullback. Price is in a retracement phase, also known as the corrective phase. Price is doing a corrective movement, most probably to tap into this zone, and then we continue the bearish trend for this pair. Okay. So when price dug into the zone, you wait for a confirmation to show that price is going to reverse. I've shown you this zone on the daily, on the weekly, I've shown you this zone on the daily. So, but as an intraday trader, I wait for my zones to be mitigated on the 4 hours. So come down to 4 hours zone. I want to leave this just on the daily. I don't want it to mess up the chart. So let's come down to the 4 hours zone. When you come down to the 4 hours zone, you can clearly see that this is that same zone on the 4 hour. This is that same zone. That means it is refined to the last entry on the 4 hour. Okay. This was that first zone, this zone that price sold from, mitigated here. It has taken liquidity. It has cleared the low. This is a break of structure, a valid break of structure on the 4 hours. Okay, this is a break of structure on the 4 hours, and this is why you see that I mark this zone now. This is my next zone. I'm expecting price to rally up to. Okay, even though there's a point here, there's a zone here. This is a drop base drop. This was the beginning of the drop. This is the base. This is another drop. So you could see that there's bearish momentum. But in this whole 4 hour movement we are seeing now, price did a little bit of sweeps. We call it liquidity sweep. If you look carefully, you'll see a liquidity sweep. The wick of this candle did not close below. The body did not close below. It just swept that candle, swept it, and then closed inside. And then we started this upward movement. This upward movement is going to take us to a certain point before it reverses, hopefully. We are looking at this point. This first point will be a zone. This is a first zone. This is another zone. And this one is the extreme zone in this bearish move now. There's a zone here. There's another zone here. Then this place I marked is the extreme zone. What confirmation should I have? Would I use to have entered this trade on this volatility 50? It come down to the 15 minutes. I use my 15 minutes to confirm my trades. My 4 hour setups, I confirm them on the 15 minutes. So if I'm to go down to the 15 minutes, this is what I would have seen. Come down to the 15 minutes, this is what you would have seen. I can see I have the price, I have it marked out there. All right. So price was on this bearish drop. You see this drop falling, 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 falling. And then somewhere around here, this last high was taken. Okay. Price cleared this last high and then closed above. When it closed above, you mark out the valid demand. This was the demand that caused the impulse move upwards. You could see this impulse candle, this massive bullish candle. This is the valid demand that caused that push upwards that took out this previous high. This was the last high the market created. Even if you say this was not the last high, this is also a valid high. And even if you mark this high, which is also a valid high, this was the candle move that pushed market to the upside. So this is the demand zone. All right, what market did is market came back, slightly tapped into that demand, and then we've been bullish since then. So this trade is a 1:8 trade, targeting this equal high, relatively equal high liquidity. There's this relatively equal high. They are not exactly equal high, but relatively equal high liquidity. And price, from what I can see, doesn't have much of an option, has to clear that liquidity, which is why I'm targeting that zone. All right. So this is just how you do your top down analysis. This is how you do your top down analysis, get in on your trade, make your money and get out. So when you have 3 to 4 time frames confirming the bias of the market for that particular setup, it is strong. I've shown you why we are reacting from that zone on the weekly. I've shown you why we are reacting from that zone on the daily. And then 4 hour was my last structure, my last uh, point for my last time frame for my marking structures. Then 15 minutes, I get to take my confirmation entry on the 15 minutes. I wait for it, and once I say it, I execute. I did not execute this trade because this trade played out in the night. This is 12:30 a.m. I was definitely sleeping by then, so I didn't get to meet this trade. But I woke up and I saw it, and it was a beautiful setup. So you can replicate this on any asset you trade. You can replicate this on any asset you trade, and this is the way you cash your trades. And this trade has been giving us continuation entries and all of that. Even on the lower time frame, let's say on the 5 minutes, you could see this was where it reversed. It also gave us a very good setup on the 5 minutes. This was where price took this last high. Lately, price took this last high, or you could as well use this high. Lately, price took this high. This was the demand level, and price came down, tapped into that demand zone, and then we are buying to this relative high, relatively equal high. This is the high we are buying to. So instead of getting 1:8 as of our 15 minutes time frame, we are getting we are getting a 1 is to 16 on the 5 minutes time frame. The lower the time frame, the higher your risk to reward. But the more technical and tactical your entry becomes. So you must know what you're doing. On the 5 minutes, this is what we have. I like the 5 minutes entry because once it gives you a valid confirmation, it gives you a very crazy risk to reward. Okay, and a trade like this, you put $2, you're at $32. 1 is to 16. You add $32 on this, on just this simple trade. You could see where it reversed. This was where it reversed. Just want to keep it on the 5 minutes. So this was where it reversed, came back, mitigated this demand zone, and then we have been bullish since then. Our target is this liquidity resting here, equal high liquidity. We are going to target that liquidity, and until then, we are buying. Until that zone is taken, we are buying. So here I spotted this. I don't know if price can still come back there. I spotted this imbalance here that broke structure. You can agree with me that this imbalance, when the bullish move started having series of break of structures. We have a break of structure around here. We had a break of structure around here. After which we had another break of structure somewhere around here. We had this one around here. Let me mark the obvious one. We had this one around here, but this one is the one I'm trading now. We had this one around here. Valid break of structure. Market came down, mitigated a demand zone here. There's a demand zone that market mitigated. If I'm to market, you say it. See this demand zone. This last candle before the bullish impulse move. Just this zone here, right about here. So that is the zone price mitigated for this continuation trade. When price broke this high, pay attention. When price broke this high, it did this pullback. This pullback become our inducement. Hey. So this pullback is our inducement. Price rallied to the top, came down, mitigated here, and you would have gotten in on this trade by just entering somewhere here, and then your target remains the same. You are targeting the same equal high liquidity, but now your stop loss is around here, just around here. This is giving you 1 is to 11. So now price went up, broke structure again on the 5 minutes, broke structure again, and broke structure, dropped this as inducement, went up, came back. It hasn't fully cleared inducement because this is our valid zone. This is our valid zone here. But it first of all reacted from this place here. There's a very slight demand zone. If you look here carefully, you'll see this demand here that he used in buying. But I'm optimistic that price will likely dump all the way to this extreme demand because that is what it has been doing. Extreme demand. Although these ones they don't have multiple levels. This one just have this is the only demand zone here. In this one also, this is the only demand zone here. This was inducement, so he traded from the inducement before he finally came to the extreme demand. So in this one, we have this demand zone, and then we have another demand zone here, which I believe is inducement. Price is trading from inducement, which is why I'm still holding this setup as a valid setup. Why I have not deleted it, I'm still holding it as a valid setup. And if price comes to that zone, I will just enter. I'm not waiting for confirmation. If it takes me out, so be it. But it's a trade that I will take if it comes to that zone. That is why I have not marked any other break of structure because price is supposed to respect this first and then move up, which I believe it will do. So this is the setup I have now for volatility 50. I've missed this one. I've missed this one. But this one, now that I'm up, this is around 11:52 Nigerian time. Now that I'm up, I will definitely just set it and leave it. Whatever happens, so be it. But it's a good trade I want to partake in. So hope you learned something on top-down analysis and how to frame your zones. This is a break of structure. So price was supposed to come down, clear this. All these things are inducement. Clear all of it. This is the extreme liquidity here. This extreme inducement here. So price is supposed to clear it. So I will just be patient and wait. In this market, you just have to be patient. But what we invalidate this trade is if price gives us take profit without coming to our zone, this trade is invalidated. But if price comes to the starts dumping now and comes to this zone, it's still going to give us our take profit. Okay. So we just hold on, even though this pair is bearish on the long term. We're in a corrective move, taking us back to where market is going to dump from on the higher time frame to a value supply zone that market will dump from. So that will be all for now. I hope you learned something. If you have any question, kindly drop it in the comments or send it straight to my DM, and I'll do my best to see how I can respond. Do take care of yourself, and bye bye for now. I remain yours truly, Big Lou.